Nick, for some context, what are some energy efficiency or clean transport names that you like?
Yeah, so I'll give you a couple of examples. So when we think about energy efficiency, it's really simple. You know, most businesses in the world are trying to hit a carbon neutral target at some point in the future. Most of companies in the world, I'm sure most people notice, have committed to it. A simple thing they have to do, most companies in the world have office buildings, headquarters. Their office buildings need to reduce their carbon footprint. The simple way to do that is to be more energy efficient. And so here we're looking for companies that help them do that. So a great example is a company we've owned for a long time would be Kingspan Insulation. It's an Irish company. They make insulated panels. These panels allow buildings to be, like this building, to be a 6-star energy building. Once this building's a 6-star energy building, that lowers our footprint and allows us to get us closer to our target. Another good example would be lighting companies, you know, lights that come off and on that sensor, your air conditioning that comes off and on that sensors. And so these are really traditional industrial companies where their outlook has changed because the mode that what people purchase their products has changed. And so again, I mean, maybe a simple example again, but you know, heating, ventilation and cooling, we like is a company called Trane Technologies. They told us for 50 years people would only call them if something broke, i.e. your air conditioning broke. And now people call them because they're trying to lower their carbon footprint. And so it's a completely different economic conversation and so it's really transformed their industry. So those are some good energy efficiency names. Clean transport is really simple. You know, it's Tesla and everything down. So electric cars and anybody who's going to help enable that shift to electric cars. We'd also include in that hydrogen and hydrogen vehicles. And we're really looking at not just the car makers, but also the supply chain, be it semiconductor companies, or be it resource companies like lithium and nickel that go into the batteries, or even the battery companies themselves. And because this is clearly going to be one of the biggest shifts out there, and there are really a plethora of companies that benefit, but the one that we all know is Tesla, and we're sure there's many more to come.
And James, what about some names within clean energy or circular economy?
Yep, great. So I might start with clean energy. So a lot of the names we like here are the companies that are transitioning to the renewable forms of power. Obviously, everything needs to be electrified in the future. To do electric vehicles, you need more power. To move all these industries off fossil fuels, you need to move to electricity. So the natural place to look first and foremost is just at the utilities. Those utility industries, which were previously quite slow growth, low growth, quite boring, have actually become growth companies today. So we do like a number of utilities around the world because they're the ones that ultimately develop the solar farms, develop the wind farms, develop the grids that basically harden all these sort of infrastructure, all the infrastructure we're going to need in the future. We like all the suppliers to those utilities. So it's companies involved in building turbines, solar panels, batteries, cables, etc. So that's pretty much our universe of the clean energy companies we're looking at. Circular economy side's quite a broad side of the portfolio. So there's a lot of different things in there. It's companies involved in reusing water, waste to energy, garbage collection and recycling from that, agricultural use. There's a broad swathe of companies involved there. One company we like, it's a very simple story. It's Ball Corp. It's the largest company in aluminium cans, and that just benefits from a very simple shift from plastic bottles and packaging to cans, because cans are almost 100% recycled. They're a lot easier to recycle than plastic, and then they get this just very simple shift, share shift over time as their customers, like the CPG companies, your Cokes and your Pepsis and so forth, hit their targets or look to hit their targets around the circularity of their businesses as well. So that's an example of one of the circular economy type of companies.
And can you tell us about Munro's experience in investing in climate and maybe compared to its competitors?
Yeah, thank you. So actually Munro's been looking at climate stocks for 15 years. So long history there. Climate is an interesting space in that there's no MSCI database or Bloomberg sort of tool that you can use to just download everything and figure out every company out there in the world. It's something that sort of needs to be built up over time, just from traveling, speaking to people, speaking to companies, etc., and getting to know these businesses over time. Nick mentioned Kingspan before. I think Nick's been talking to Kingspan for over a decade now. It's an Irish business, family founded business, still run by the family. And so that's sort of our edge. It's speaking to these companies over a very, very long period of time, and also looking at them a bit differently from maybe what the market is. So we look at climate as an area of interest, and we look at the tailwind behind it. We look at the 50 trillion of spend. We look at where that 50 trillion is going. We look at the companies that are going to benefit from that. Others that are looking at these type of companies and these stocks are looking at them because they're responsible for managing a sector or a country within a broader business. We're really looking at them from the actual end tailwind to their earnings that they have. And that's really how we do everything at Munro in terms of these bottom-up areas of interest and understand the structural growth tailwinds behind them.
And Nick, how important is Denmark and Europe as a whole in government policy in creating the right environment, so to say, in finding these decarbonisation winners?
Yeah, so Europe's clearly at the forefront of the decarbonisation agenda, and you know, within the EU there are lots of policies that continue to grow every year. So they've had a carbon price for a very long period of time, a couple of decades now. They have a thing called the taxonomy, which is how they're going to tax different goods, what is considered a good good, what's considered a bad good, and so very strong public policy. Public policy is useful in helping drive the agenda, but it's not really what's actually getting us to decarbonise the planet. It's really the corporates that are trying to fit that role, and the investors, like the people watching this video, who are demanding that corporates get to that net neutral target. And so we think it's not really driven by government support. It helps create a supportive environment. And I think the good example we'd give you there is that these countries that were very early adopters of renewable energy, like Denmark, I think you mentioned, is a good example. You know, it's no coincidence that the world's largest wind turbine manufacturer in the world, OEM Vestas, is listed in Denmark. Okay, so the national champion was created out of their industry domestically developing first. It's also the world's largest offshore wind developer, Ørsted, is also listed in Denmark, which was previously the national oil company of Denmark that transformed. So policy is very helpful in helping us create these great companies, but it's definitely not what's required to get us to decarbonise the planet. We think it's going to happen anyway.
And then by way of example of government policy, what actions, if any, were taken post the Biden appointment in terms of climate?
Biden's probably had a bit of a difficult time getting a lot of the things he wanted to get done, and that's not unusual in politics, and I suppose particularly US politics, with particularly the state of politics today. So there hasn't been an awful lot of concrete measures, but as Nick mentioned, government incentives and programs are nice, but at the end of the day, corporates are going to do it anyway, and it's going to happen anyway. You can see at the moment the oil price has gone up a long way. People are worried about carbon and so forth. And so actually the cost of inaction is higher than the cost of action here. We see natural disasters all the time. And also the cost of solar, wind, etc. These sort of existing maturing renewable technology is actually a lot cheaper than the cost of burning coal and gas today anyway. So it's going to happen from a pure economic argument anyway. And
what are some of the risks involved with investing in climate?
Yes, I'll start with that one. The risks, are the same for all our investments. You know, generally you can find the right area of interest or the right theme, but you can end up investing in the wrong stock. People always hear me use the smartphone example, but you know, wouldn't you be upset if you knew smartphones were going to be big and you still owned your BlackBerry shares today? You know, they didn't quite work out. You needed to find Apple, and so those are the same risks we always have, where we found the right industry, the right growth, but we backed the wrong company. We use our stop loss programs to manage that, to help us learn to react to problems and our interactions with management teams. That'd be one of the key risks. The other risks out there that's slightly different versus other sectors is changes in government policy. Can definitely cause a pause in what's going to happen, but they shouldn't derail it. And so from our point of view, the real focus for us is to just really drill down on, and the same as we do with everything we do, is the reality is it's going to be a game of few winners and lots of losers. There will be a few winners here, it's pretty obvious. Our job is to work our way towards those few winners, and sometimes we don't get them the first time. And that's one of the risks that's out there.
And how does active investment in a climate company actually assist in decarbonising the planet? Well,
first of all, we obviously speak to management teams all the time. And I mentioned earlier that we don't necessarily invest in the best ESG companies today. So not everyone has to have the perfect score today, but we obviously understand that people have legacy assets as well. Society still needs gas, coal, etc. until it's able to transition. And so we invest in companies that still have those assets but are transitioning to renewables, basically, as an example, to give you an example. What we'll do as an investor is we'll continue to speak to the company and we'll effectively try to get them to move quicker. It's in our interest to get them to move quicker from a purely economic perspective, because we believe that a lot of these companies are very cheap because they still have these legacy assets. If we can get them to move quicker, and if management teams will move quicker, then we think that they'll get a higher valuation multiple in the market, and it's a way of basically assisting their share prices, as well as obviously their earnings potential they're going to get from developing all these assets as well. So that's how we can sort of speed up the decarbonisation process as active investors. And we do have these sort of stewardship programs in place as well to manage this.
You mentioned stewardship. Can you explain what the stewardship program is?
In our investment process, we have many different things that we look at all the time, on the P&L side of the business as well, but also on the ESG side as well. And within that, we basically score each company based on its own industry, of the key sort of criteria that we think are important to that industry and that company specifically, and things that we think that the company's lacking in, where they're weaker, where maybe they haven't addressed adequately relative to peers or relative to where we think they should be at. We can then go back to the company and ask them why they're weak in these areas, why aren't they disclosing these metrics, etc. And we can push them to basically do that. And over time, hopefully that leads to more transparency, better outcomes for the company. In our case, in the case of the Climate Fund, it's probably going to mean a quicker transition period as well, and just helping us benchmark the different companies doing different within the same industries, who is actually the better companies. And we obviously want to ensure that our companies are the best of breed companies. So that's pretty much our stewardship program. It's basically just engagement back with management and trying to get them to do the best job they can basically do.